Hi there, everyone. Good afternoon. First of all, I would like to kick off, like Dave says, we've been lucky enough to work with Dave and Joe since we started the company back in 2015, and it's fantastic. We think they do a great job bringing together a really excellent community. So it's a real pleasure for us to be with you here again in Toronto. And I'm going to provide a few thoughts on what we see as the sort of megatrend of our times, really. And I know that sounds pretty outlandish, but this is really, a supply chain and a market that is central to everything we talk about when we talk about the energy transition. We know how much effort's going into creating a more sustainable future, shifting the energy mix. And central to all of this is the lithium-ion battery, energy storage. So I'm going to walk you through some of the opportunities that we see in that market emerging, and more importantly, some of the challenges that the industry is going to face as we move into this next period of electrification. A brief bit about Benchmark just before I begin, for those of you who aren't familiar with us. Oh, there we go. Brief bit about Benchmark. We set up the company specifically to focus and to be an independent price reporting and market intelligence firm for the lithium-ion battery supply chain. So everything we do at Benchmark is focused on what we see as the most critical inputs into a battery, right through to the battery cells that are going into and powering electric vehicles and other forms of energy storage. We provide a number of different services, anything from price assessments, monthly market data, right through to more bespoke consultancy and long-term forecasting. So I'd encourage anyone who's interested to learn a bit more about that to visit our website, benchmarkminerals.com. So moving on, I wanted to kick off really with the three forces that are really at the heart of what we're seeing in this new lithium-ion economy. The first of those is industry, and we'll all be familiar with what automakers, the commitments automakers have made to electrify their fleets over the coming years. A huge amount of momentum has built, stretching right back to really when Tesla announced the Gigafactory back in 2014. But all of that momentum and the race to remain competitive in the automotive landscape has led to a huge amount of industry momentum. And that industry momentum isn't now just focused with automotive companies. As I'll come on to talk about, what we're now seeing is that industry force moving its way upstream. All of that has sort of led to what we're seeing as really just an indicator, not the end goal of what's going to happen along the supply chain, but really just warning signs of what's to come in the future, effectively, when we talk about the market forces that have emerged. We're, of course, familiar, many of you would have seen the headlines about lithium prices over the course of this year, up 800-900% over the course of 12 months, a really incredible rise. You would have seen the turbulence in some of your more established markets, your nickels of the world, and some of the turbulence we saw on the LME contract earlier this year. As I say, these are just warning signs of really what's to come. We're just at the start of this growth story, and this is just an indicator of the turbulence and the volatility that's going to be increasingly frequent in raw material markets. So we have a number of market forces really giving us indicators of what the industry has to do. And then all of that is being compounded by and perpetuated, of course, by what's happening at a policy level. Policy is still very central to the adoption of and the push towards electrification. We've seen China over the past decade with a very consistent approach towards electrifying its domestic fleet. We're now seeing more and more countries in Europe make commitments to banning the sale of combustion engine vehicles, which again is accelerating the development of electrification. And then I think the developments we've seen, particularly over the past 18 months, 2 years in the North American market, I would argue have been the most substantial to date in terms of pushing forward from a policy perspective the future of the EV market. Obviously, the biggest example of that, of course, is the Inflation Reduction Act, which we saw in the US. Now, this is a huge, vast, sweeping piece of legislation. I don't want to go into it in too much detail because that would be a whole session or afternoon in itself. But I think there's two key components to this when you think about it in relation to electric vehicles. The first is the tax credits that are fundamentally going to make electric vehicles more affordable to consumers within the US. So that's only going to step up the demand side of the equation. But more importantly, and I think more interestingly, when we talk about the supply chain, is some of the tax credits and the incentives incentives that are being put in place in terms of developing that supply chain, not just in the US, but alongside free trade agreement countries with the US, to make a more secure, to ensure security of the supply chain in the longer term. And I think fundamentally what that doesn't just dictate what's going to happen in the US or within the US and free trade agreement countries. It actually impacts the full global shape of trade around the lithium-ion battery supply chain. The incentives around where people ship material, who they work with, and what markets they sell into is going to be massive, and we're only starting to see that play out now. But as we get more clarity on the implementation of this legislation, it's going to have far-reaching consequences to the supply chain in the future. So all of that momentum is ultimately, of course, seeing a huge uptake in the production and demand for lithium-ion batteries. This graph here shows that, in this year, we're looking at demand for lithium-ion batteries increasing by another 40%. Just for context, when talking back to when we started Benchmark in 2015, the total global market for lithium-ion batteries was somewhere shy of 60 gigawatt hours. This year, we're set to break the 600 gigawatt hour mark. So in less than a decade, we're going over 10x growth in lithium-ion battery demand. And that shows no signs of slowing. So if we look forward to 2031, we're now projecting demand for lithium-ion batteries at around over 3 terawatt hours, which is 3,000 gigawatt hours by the early 2030s. And one thing that's for sure on this graph is that this number will only set to increase. What we've seen perpetually since we started forecasting this market is that the trajectory of lithium-ion battery demand only gets steeper with those industry forces, with more commitments from automakers, energy companies, and of course the policy momentum. That number only ticks up over time. So 3 terawatt hours taking you another 5x growth over the coming decade will almost certainly be a conservative outlook for where we actually end up by the early 2030s. So you then ask, where are all these batteries going to come from that are going to fuel this, feed this huge engine of battery demand? I think it's important here, and I wanted to pause just to point out something that I think is often misunderstood about the lithium-ion battery. Some people think of lithium-ion batteries as just one thing that goes into an electric vehicle or goes into other types of applications. The important thing about a lithium-ion battery is that it's a huge, diverse group of things, using a huge range of technologies and ultimately different mixes of minerals and metals for the different types of batteries that are being produced. So there is no one type of battery that you can look towards. But what is for sure is the quality of batteries that are going to be required to sustain this next period in the growth story of lithium-ion batteries will have to be higher quality than we've seen before. The quality requirements that Western automakers are putting on their batteries are significantly higher than we might have seen from your Chinese manufacturers to date. And for that reason, there's actually only a group today of 9 companies that fall into the Tier 1 category of being qualified with Western automakers. So a huge amount has to be done when you see the huge pipeline of lithium-ion batteries. Quite often people think, well, that's job solved when you take that one step up the supply chain. The battery component of this is going to be fine. We see the billions of dollars flying around in Asia, in North America, in Europe. It's really going to be about the type and quality of batteries into what can fill this demand. And if you look at this group of 9 producers, they account for only 45% of the pipeline of new capacity. So less than half of the capacity that's in the pipeline today isn't qualified to supply Western markets. So that drills down that number of how much is coming on the horizon significantly. And if you look at this from a regional perspective, what those 9 companies operate today, only 8% of that is located in North America. And when you talk about creating a sustainable energy storage infrastructure for electrification outside of China and outside of Asia, there's going to have to be a huge amount done to shift some of that battery production closer to its end market. So automakers, I'm not the only one saying this, automakers, of course, have woken up to this reality. And although they have often been bullish in what they were going to say before looking at the supply chain implications, the next step up, the batteries, is an area where they have really, particularly over the last 2-3 years, taken a significant stake. So if you look at the pipeline of JVs going back to September 2019, if we were stood here 3 years ago, you would have seen that this was an exhaustive list of all of the partnerships that automakers had made with their direct battery suppliers. This is where they were going to get the materials that would ultimately fuel the electric vehicles they were targeting. A very limited number, and less than 300 gigawatt hours of capacity was being targeted via all of these partnerships. A huge amount has been done just over the last 3 years. This is now the landscape when you look at what automakers are doing with their battery partners. Huge number of partnerships, typically automakers not just tying themselves anymore to one established battery producer, but multiple battery producers. And all of this is creating that strong total pipeline that I mentioned of over 1 terawatt hours of battery capacity by the early 2030s. So automakers have woken up to one step up the supply chain, but that by no means addresses the total issue they're going to face. So when you think about the build out of an electric vehicle, you're not just talking about getting your batteries. People think if you have the batteries, then we're good to go. You have the capacity to build all these lithium-ion batteries, we'll build the electric vehicles. The risk gets much bigger as you move further upstream. When you talk about a battery, you're not just producing scale for a battery cell. You actually need the midstream anode, cathode, electrolyte components. You need the refining capabilities of your raw material, all the way back to fundamentally needing the extraction and mining of the key raw materials themselves that go into this supply chain. So it's a multifaceted issue that the automakers and the industry today are only just waking up to. And just to put that in context, if you look at the North American market, what I've done here is I've outlined for this current year, for 25 and for 2030, the total number of EVs that we're expecting to be sold in the North American market. And what I've done here is I tallied that with how much domestic production, or regional production, should I say, North American production of lithium, cobalt and nickel could sustain in terms of electric vehicles. And what you see on the bars on the left-hand side of this chart, the two bars on the left represent your lithium and your cobalt. What you can see is perpetually the coming decade, despite the expansions, despite the efforts of companies in this room and outside of this room to really address some of this imbalance, we're still facing a massive deficit if we're looking at sustaining North American demand itself. And even in some of your more established markets, such as nickel, where of course Canada has an established base of production, if theoretically, which it wouldn't, but if theoretically all that nickel that's going into industrial markets today was redirected to the electric vehicle industry, yes, you'd have enough for 2022, but you'd be cutting it pretty fine for 2025, and you're not expanding at the rate that's going to be needed by 2030. So a lot of work needs to be done across all of these raw materials, whether you're starting from non-existent production or you're starting from a relatively strong supply base. It's about expanding, and an expansion that has to happen in a relatively short time frame. And time frames are the key when you talk about how you're going to address some of this issue. I think often the misconception, and probably not from the people in this room, but if we talk about a lot of the people coming at this from more of a downstream perspective, is that these markets, economics will force these markets to move in response, right? If we have all this battery demand, we build all these massive battery production facilities, the rest of the supply chain will scale because they see this demand on the horizon. That hasn't happened. It hasn't happened at the pace. And the timing of this supply chain is so dislocated that ultimately that is going to perpetuate the volatility that we see, particularly over the coming decade. So if you think about the outlines that I mentioned from automakers at the start, those targets that we keep on hearing about electrifying our fleet by 2030, 2035, we're going to have 60, 70 new models to introduce to the market over the next 5-10 years. Those type of targets have already been made. Now it's the case that the rest of the industry has to move in response to it. And while the midstream steps in the supply chain can arguably be a bit more responsive to that demand, as it emerges, you can build a new anode, cathode facility, even a new refinery in some cases in 1 to 3 years. What can't move and what you can't adjust in a short amount of time is the development of new raw material production facilities. It's the extraction and the mining that will be the biggest bottleneck to the push towards electrification. And that timeline we put here, anywhere from 5 to 25 years, you'll all in the room have your own opinion on where we sit on that. But I'd argue that everything, as you try and diversify this supply chain away from China, indicates that we're going to move to the higher end of that time frame to build new production mining facilities in North America, in Europe, outside of Asia. So timelines, the big risk for automakers now is not just to address where their direct input for their EVs is going to be, which is the battery. It's about addressing the complete opposite end of the supply chain. And that's a huge leap in terms of expertise, in terms of their confidence to invest and to get involved in markets which they fundamentally don't have any expertise or any history operating in. But that hasn't stopped them. And, companies are waking up to this. They have woken up to this, particularly over the past couple of years. And what you see here is some of your leading automakers, particularly those committed towards electrification. And it shows you how increasingly they're stepping into parts of the supply chain where they've never operated before. They understand that they're going to have to bring capital, they're going to have to bring confidence, and they're going to have to drive the development of new assets further upstream than ever before. And the positive here is that you are starting to see that momentum build. You see Tesla, who I'd argue are probably their most developed in terms of their supply chain strategy around electric vehicles, VW, close behind them. You see those companies now going, we need to operate at the mining level. We need to get involved in extraction, and we need to take a direct role in ensuring that that material is available for our EV ambitions. The issue is that as you expand, and as I'll come on to show you, there may not be enough to go around all of these automakers. So this is our projections for where your key raw material inputs are going, and you can look at these lines and look at the graphs. But what it fundamentally shows is that for all of your critical raw material inputs over the course of the next five years or so, all of them are facing structural issues and are going to face periods where these markets are in deficit. There's no question about that. You're seeing it in lithium today, you're going to see it in cobalt, you're going to see it in nickel over the course of the next 5 years. The bigger issue comes when you talk about that 5 to 10 year time horizon. Because in that period, what we face today, and with the money going into these markets, the rate at which expansions are taking place, we face a raw material cliff edge. There will be a point where we stand today where we just fundamentally don't have enough material to hit anywhere near the numbers automakers, government policymakers are really targeting for the future. So to avoid us falling off that raw material cliff edge, serious money needs to start going into these markets today to address the issues of 5-10 years' time. And, without being the bearer of bad news, yes, you can look at this from the perspective of we just need to get the actual lithium units out of the ground, we need to get the cobalt, we need to get the nickel. Of course, that's your first problem. What's adding and perpetuating some of those struggles and is going to add to the pressures on these markets is, one, companies now want to do it and they want to ensure their supply chain security. So they're trying to do it more regionally or more domestically. So they're trying to dictate and limit the pool of material they can work with to locations that are favourable to their operations. You layer on top of that you now have more sustainability and environmental social scrutiny than you've ever had in probably extractive industries. That adds another hurdle that these industries are going to have to come. And finally, what a lot of people don't understand is that not all of this material, if I can extract some lithium, it doesn't mean it can go into a battery. That in itself doesn't solve the problem. These are finely tuned materials. To go into the battery industry, not all your lithium can be used in the battery industry. Not all your nickel is going to be suitable. Not all your cobalt is suitable. So we can look at this from the global perspective and say we have a major issue here. When you layer on these components, unfortunately, we have an even bigger hurdle to overcome. So a few concluding remarks just to put this into context. I think the first question we get asked is, how many new mines are we going to need? How much new production? We did this infographic a while back, which anyone can access via our website. But this basically shows that if we were to try and meet the demand that we're projecting for 2035, just across these 5 key battery raw material inputs, you'd effectively need almost 400 new mines to do that. if we're talking about the scale of these operations today. It's not a few operations here or there. It's not a few dozen operations here or there. It's 400 operations that we're tallying to hit that 2035 demand number. So massive scale. And I would caveat that with saying this is without battery recycling. So battery recycling definitely will play a role, and I'm sure a lot of people would have heard, about the potential and the opportunities of battery recycling. But I caveat that with saying that we're on such a growth we're in such a growth spike for lithium-ion batteries. Growth year on year means that fundamentally, even if all those batteries are coming back and we're extracting all the raw materials that we used 10 years ago to build our batteries, it's not going to touch the surface of where we are in 10 years' time. So recycling will play a role, but a huge and the vast majority of this is going to have to come from new mines, new extraction. How much will it cost? The big question. We did a bit of analysis a few months back, and we looked at, if everything aligned perfectly in lithium, which it never does, we picked the right assets, the most effective assets, most effective technologies, how much would really sort of solve this lithium deficit we see through to 2030? We came up with a conservative number of in and around 42 billion. Let's say it's 42 billion. Just to give you some context, that's what your companies like your Netflixes, Disney, HBO Max, that's what they spend, less than what they spend in a year on content generation. But probably more pertinently, and where we can start having a bigger impact, is if you look at the automakers. If you look at that group of 5 automakers themselves, they as a group can spend $61 billion a year in R&D investment. So the capability is there, the money is there. If industry collaborates, if public markets get involved, if governments can support this, it's not something that we can't overcome. It's that the money is going to have to go into these markets incredibly fast to meet those challenges that we're expecting come the end of the decade. And finally, the big China question. The elephant in the room, and something that often I find in conversations around the battery supply chain, China's just brought up as the adversary that we should all be working against and trying to combat China. I'd argue, and when you look at China's dominance along the supply chain, I'd argue that China actually can provide a pretty solid blueprint to what the rest of the world needs to do. China actually, if you look at the extraction, which like we're talking about, is probably the biggest bottleneck to the build out of the lithium-ion economy. China doesn't necessarily have very good assets for any of these key raw materials. It doesn't have great lithium, doesn't have great cobalt, doesn't have great nickel. But what it has done incredibly effectively is invested in the downstream steps in the supply chain, which has dictated the flow of that material has to go through China to reach a lithium-ion battery. The challenge for the rest of the world is diverting some of those trade flows, is moving that material and building out the infrastructure in the rest of the world, so that not all material necessarily has to go into China before it can find its way into an electric vehicle here in Canada. So that's all from me. I appreciate your attention. Thanks for letting me interrupt your lunches. If you do want to find out any more of that information, like I say, a lot of those infographics I just showed you, even if you just want to access those, you can get them on the website. We are having a running competition of who can get the most QR codes clicked, so if anyone can help me out with that, that'd be great. But you have my contact details there. Thank you very much for your time.